This is the Times Television Network, and you're watching ET Now.
Leif Eskesen, Chief Economist, India and Asian at HSBC Global Research, now joins us on the show with his take on the forex markets, Indian and global as well. Leif, hi. Do you feel the strength in greenback can put immense stress on the rupee and other emerging market currencies? Also, India is highly vulnerable to changes in the external funding environment, and moreover, fiscal repair will also be a long process in the upcoming elections. How will all of this guide the rupee directionally?
Well, I think, of course, the INR is still, somewhat susceptible to changes in global financial conditions, because despite the reduction we have seen in the current account deficit, it remains sizable still. So India still depends more so than other emerging markets, not all, but some of them at least, on external funding. So of course they are susceptible to changes in that. With Fed tapering now underway, although in a more controlled manner, that of course poses risk for India on that front. I would say, however, though, I wouldn't suspect that we're going to see the same type of gyrations we saw over the summer. I mean, since then, the current account deficit has narrowed notably. Funding conditions have improved. And yes, Fed tapering is underway, but it's not being executed maybe in the more draconian fashion that a lot of market watchers were fearing over the summer. It's gradual tapering we're looking at. The Fed wants to be cautious about getting yields up in the US and manage that very diligently. So I think we will not see the same sort of disruptions on that front. I would also suspect if the currency does get under more pressure, as we saw over the summer, there would be a policy response to that that would help alleviate some of the volatility. So it's probably going to hover around current levels. The level of volatility will be lower than what we saw over the summer. On balance, probably a bit of a bias to the downside to the currency, but not to a great extent. But volatility, of course, in the short term will be there.
Fair point, Leif. Also, the rupee has depreciated 12% versus the US dollar. On a relative basis, it has perhaps outperformed many of its EM peers in this last quarter due to rapidly improving current account, healthy capital inflows and RBI steps as well. But will this outperformance stretch through 2014 vis-a-vis EMs or Asian peers, even as some say that 2014 may be the year of dollar and euro?
I think, as I mentioned earlier, that the INR is still relatively, shall we say, vulnerable compared to some of the other currencies in the emerging market space. As I said earlier, India still has a high current account deficit. It's not as sizable as it is, for example, in Turkey or countries like that, but it's still sizable nevertheless. So I think it's still in the group of shall we say, currencies, EM currencies that are relatively more vulnerable because of the external position, but as I mentioned earlier, relative to where it was this summer, things have improved, and that suggests that we're probably going to have somewhat less volatility on that front. But I think, so you need to look at it from that perspective.
Leif, also, do you see a sign of currency wars in the Asian emerging markets as the US tapering moves towards a conclusion, perhaps?
I mean, there, of course, are always, in some sense, risks when you have that economic conditions are not as strong as they used to be. Individual countries are somewhat more concerned about, preserving growth, if you will. But I would still say I wouldn't expect, a currency war to break out. I think there would be some careful management of currencies to some extent to make sure that the level of the currency is consistent with the, should we say, economic cycle of the individual countries, right? But I think an outright currency war, I don't think is in the cards.
My final question to you then, and do you see commodities like crude oil and gold prices moving over in the next 1 year? Are you looking at any bullishness there?
Well, I think gold, I don't think necessarily looks very, very promising. Obviously, it's received some beating already now with, should we say, Fed tapering on the way. Should we say the prospects of returns on U.S. assets, whether it's equity and yields improving, that of course has not been a positive for gold. So I would still suggest that that's going to remain a challenging year for gold, for that commodity. Crude oil prices, I mean, with the global economy likely to slowly shine through during the year, of course, from the demand side, that would add a bit of a lift to crude prices. But I think at the same time, if you look at the supply side of things, there are things on the way on that front that are also pushing things forward, right? So that is going to, I would say, contain the uptick in crude prices. I don't really expect much of an upswing there, even as the global recovery shines through. And also, the global recovery in itself will be quite moderate, so I don't really think we should expect a very swift recovery on the global front, and therefore in demand for crude and other commodities.
All right, Leif, we'll let you go at that. Thank you so much for joining us with your update on currencies. That's the view coming in from the HSBC Global Market there.
This is the Times Television Network, and you're watching ET Now.